Welcome back again. Today is a question bank for Section B MCQ. B1, Strategic Planning. B2, Budget Concepts. To follow all the parts, please subscribe to the channel and like the videos to support completing all questions. Let's start.
Question 1. Which of the following is not an example of an internal factor in SWOT analysis? A. Physical assets. B. Human skills. C. Customer demographics. D. Reputation and brand. The answer is C. Customer demographics. Customer demographics. This is not an example of an internal factor in SWOT analysis. It is an external factor that could be considered as an opportunity or a threat for the organization. Question 2. Which of the following situations will most likely enhance a buyer's bargaining leverage? A. Purchase of an upstream supplier. B. Larger supplier compared to the buyer. C. Buyer's inability to stockpile inventory. D. Analysis of cost alternatives of smaller identical items. The answer is A. Purchase of an upstream supplier. Ability of buyers to backward integrate will enhance their bargaining leverage. Current prices and/or other terms can make an alternative more attractive than continuing to buy externally. Question 3. How is strategic planning different from strategy formulation? A. Strategic planning addresses how to implement business strategies, whereas strategy formulation results in new strategies. B. Strategy formulation develops designs to implement strategies and achieve the goals, whereas strategic planning creates strategies and defines goals. C. Strategy formulation identifies the opportunities and threats in the short term, whereas strategic planning continually re-evaluates strategies based on perceived long-term opportunities and threats. D. Strategy formulation typically identifies external opportunities, limitations, and threats, whereas strategic planning identifies internal factors, such as organizational strengths, weaknesses, and competitive advantages. The answer is A. Strategic planning addresses how to implement business strategies, whereas strategy formulation results in new strategies. Strategic planning addresses how to implement business strategies, whereas strategy formulation results in new strategies. In practice, strategy formulation and strategic planning overlap quite a bit, but the two processes have important conceptual differences. On a fundamental level, strategy formulation results in new strategies, and strategic planning addresses how to implement the strategies. Question 4. The management of Mateo Incorporated, a manufacturer of printer cartridges, has set the following tactical goal for its marketing department: to increase product sales by 15% this year. In order to help achieve this goal, Ravi, a team lead in the marketing department, has formulated the following supporting objective for his team: every member in the team must sell more units in the next 4 quarters than he or she did in the last 4 quarters. As Ravi's manager, what advice would you give Ravi to make the objective more effective? A. Clearly state the consequences of not achieving the target. B. Provide a clear timeline for performing the required action. C. Make the target more realistic and attainable. D. Specify a clear, quantitative target. The answer is D. Specify a clear, quantitative target. Objectives should be specific, measurable, attainable, realistic, and timely. The objective given here is measurable, attainable, realistic, and timely, but it is not specific about the level of performance. Question 5. Which of the following components is assessed in an internal capability analysis of an organization? A. Resources. B. Export. C. Stakeholder demands. D. Accounting practices. The answer is A. Resources. Resources internal capability analysis helps to ensure that the organization has the resources, skills, and processes to reach its strategic and tactical goals. Question 6. Which of the following statements concerning strategic planning is correct? A. A company selling paint likely uses a longer time frame for strategic planning than does a company selling women's clothing. B. A company selling paint and a company selling women's clothing both likely use a 3-year time frame for strategic planning. C. A company selling paint likely uses a shorter time frame for strategic planning than does a company selling women's clothing. D. A company selling paint may use a longer or shorter time frame for strategic planning than does a company selling women's clothing, depending on management's preferences. The answer is A. A company selling paint likely uses a longer time frame for strategic planning than does a company selling women's clothing. The appropriate time frame to use for strategic planning varies depending on factors such as the intensity of competition and how quickly products and services change. Organizations facing less intense competition and selling products and services that change less quickly typically use longer time frames for strategic planning than do other organizations. A company selling paint likely faces less competition and less rapid product changes than does a company selling women's clothing. As a result, the company selling paint likely uses a longer time frame for strategic planning, therefore, this is the correct answer. Question 7. When using SWOT in designing strategy, which of the following describes an ST strategy? A. Identify how to use our strengths to reduce exposure to threats. B. Pursue opportunities that are a good fit to our strengths. C. Overcome our weaknesses to pursue available opportunities. D. Establish a plan to prevent threats from exploiting our weaknesses. The answer is A. Identify how to use our strengths to reduce exposure to threats. This is the description of an ST strategy as it focuses on internal strengths to combat external threats. B. Incorrect. This is the description of an SO strategy. This strategy appropriately considers strengths, however, it must also consider threats. C. Incorrect. This is the description of a WO strategy. D. Incorrect. This is the description of a WT strategy. This strategy appropriately considers threats, however, it must also consider strengths. Question 8. Steve Electronics is a leading manufacturer of cell phones. Its close competitor, Sydney Tim Incorporated, has introduced a new model with a modified version of the latest operating system. Which of the following is the most likely effect of the step taken by the competitor? A. The bargaining leverage of buyers will increase. B. The cost of the company will decrease due to economies of scale. C. The profit margin of Steve Electronics will decline. D. The company will be able to retain its existing customers. The answer is C. The profit margin of Steve Electronics will decline. Due to the introduction of latest technology, customers might be attracted to the cell phones produced by Sydney Tim Incorporated. There will be increased price competition in an attempt to retain market share. Question 9. Bespoke Designs is a small store that sells custom-tailored formal clothes for men in a town in upstate New York. The company has been doing good business since its inception 5 years ago and is the first choice of discerning clients in the area. The owners of the company have approached an investor to help fund Bespoke's growth. The investor is impressed with the company's products but is worried that since Bespoke's market is an attractive one, new entrants would soon flood the market and reduce the profitability of the business. Which of the following facts can Bespoke's management use to convince the investor that the threat of new competitors is low? A. The company's offerings are premium products that earn high margins. B. Many potential competitors in the area employ tailors who were once employed at Bespoke. C. The company's products are on par with those offered by premium clothing brands stocked in malls in the town. D. The company is owned and operated by designers who are famous for their deep understanding of customer preferences and their distinctive style. The answer is D. The company is owned and operated by designers who are famous for their deep understanding of customer preferences and their distinctive style. When incumbents have high levels of experience and product/service differentiation, the entry barriers to the market are raised. Question 10. Métis Corporation, a large software services company, has benefited in the past from having a strong, centralized leadership. The top management makes decisions and sets goals for the entire organization and tasks mid- and low-level managers with implementing these in Métis's teams. Which of the following, if true, indicates that a centralized leadership is now more likely to be a weakness than a strength for Métis? A. Métis's top management now consists almost entirely of engineers who have worked for Métis for a long time and have a high degree of expertise in the services the company offers. B. Métis recently won its first contract to provide software services to the U.S. government. C. Métis recently changed its business to focus more on product development, and its teams of product developers cherish creative freedom and autonomy. D. Métis's offices are located primarily in countries where organizational hierarchies are respected. The answer is C. Métis recently changed its business to focus more on product development, and its teams of product developers cherish creative freedom and autonomy. A centralized leadership is less effective when teams cherish creative freedom and autonomy. Question 11. Which of the following is the appropriate time frame for a strategic plan? A. Always short-term. B. Commonly short-term but it depends on the industry. C. Commonly long-term but it depends on the industry. D. Always long-term. The answer is C. Commonly long-term but it depends on the industry. Strategic plans are more commonly long-term, but depending on the industry, sometimes strategic plans are shorter in term. Question 12. Which of the following is not an external factor that should be analyzed during the strategic planning process? A. A new administration's attitude toward antitrust regulation. B. The ability of a company's manufacturing equipment to handle an increase in volume from expanding into a new geographic region. C. The availability of high-speed wireless access on customers' ability to access your product. D. A company acquiring your largest competitor and investing money in the company. The answer is B. The ability of a company's manufacturing equipment to handle an increase in volume from expanding into a new geographic region. An organization needs to analyze external factors that could have an impact on its ability to achieve its goals and objectives as part of the strategic planning process. These external factors can create opportunities or threats to the organization. While the ability of a company's manufacturing equipment to handle an increase in volume from expanding into a new geographic region likely impacts the company's ability to achieve its goals and objectives, this is an internal factor, not an external factor. Therefore, this is the correct answer. Question 13. A country's political environment will likely affect which of the following? A. Long-range planning but not budgeting. B. Budgeting but not long-range planning. C. Both budgeting and long-range planning. D. Neither budgeting nor long-range planning. The answer is A. Long-range planning but not budgeting. Long-range planning requires a company to consider factors that will likely impact the company over the long term, while budgeting typically covers periods of 1 year or less. A country's political environment includes items such as regulatory action and taxes. These items are likely to impact long-range decisions more than short-run decisions. The political environment will likely affect long-range planning but not budgeting, therefore, this is the correct answer. Question 14. Elliott Enterprises is engaged in the construction of roads. The company falls under the OSHA regulations that require it to extend accident prevention policies to its employees. How does this regulatory requirement affect the organization's strategy? A. It will force the organization to be environmentally accountable. B. It will restrict the marketing campaigns of the organization. C. It will affect the technological innovations planned by the organization. D. It will affect the human resource practices followed by the organization. The answer is D. It will affect the human resource practices followed by the organization. Providing accident prevention policies to employees falls under the human resource practices followed by an organization. Therefore, in this case, the strategy of Elliott Enterprises regarding human resources will be affected. Question 15. Which of the following industries faces the least threat of competition and profitability from the entry of a new competitor? A. Automobile industry. B. Apparel industry. C. Restaurant chain industry. D. Online shopping industry. The answer is A. Automobile industry. Among the listed industries, it is difficult for a new entrant to establish business in the automobile industry. Question 16. The top management of Juno Incorporated, a manufacturer of cell phones and laptops, is in the process of conducting a SWOT, strengths, weaknesses, opportunities, and threats, analysis of its business. Andrew Hudson, a vice president of the company, lists the company's cutting-edge research and development division as a strength as it helps the company design premium products of high quality. However, Melanie Harris, the marketing manager, believes that its research and development division is now a weakness rather than a strength. Which of the following, if true, best supports Melanie's argument? A. Juno operates in a legal environment where strict regulations are in place to protect intellectual property rights. B. Juno's cell phones and laptops continue to be high-profit margin products. C. Due to an economic slump, Juno's target consumers are becoming increasingly price-sensitive. D. The bulk of Juno's business comes from consumers who are identified as early adopters of technology. The answer is C. Due to an economic slump, Juno's target consumers are becoming increasingly price-sensitive. If consumers' focus is on price and not on quality, Juno's investment in research and development is probably wasted. In fact, the premium price will likely drive customers away. Question 17. Alturo Technologies is a manufacturer of machines used in the automotive industry. Most of its business comes from 3 automotive manufacturers that are located in neighboring counties. During a board meeting to revise and prepare a new strategy, one board member expressed concern that the buyer's bargaining power is very high as the company has only a handful of buyers. What would you, as a board member of the company, say to your colleague to reassure him/her that buyer's bargaining power is not a threat to the business? A. The owners of 2 of the 3 companies that buy Alturo's products used to be top executives at Alturo. B. The buyers are aware of how critical their business is to Alturo's survival. C. Alturo's products are very expensive to install, and only spare parts manufactured by the company can be used in its machines. D. Several other manufacturers offer products similar to Alturo's products. The answer is C. Alturo's products are very expensive to install, and only spare parts manufactured by the company can be used in its machines. Bargaining power of buyers is reduced when the switching costs are high, as is the case here. Question 18. In which of the following cases is the threat of decreased profits owing to rivalry among existing competitors most likely to be the highest? A. In the case of rivalry between the top fast food restaurant chains in a market. B. In the case of rivalry between the established market leader in discount superstores and small convenience stores. C. In the case of rivalry between a company known for its innovative, cutting-edge technology and a company that sells cheap, basic technology. D. In the case of rivalry between leading satellite television companies where customers who sign up get hardware that is compatible only with that service provider. The answer is A. In the case of rivalry between the top fast food restaurant chains in a market. Fast food restaurant chains usually have little product or service differentiation, and customers often focus on price in such markets. Plus, antagonism may run deep between top competitors, and instability often results as firms may be prone to fight and retaliate. Question 19. Wishing Well Incorporated, a chain of small convenience stores in Atlanta, Georgia, has just opened a store in a rapidly developing suburb to the north of the city. The marketing manager of Wishing Well believes that the suburb is a lucrative market as the area has several expensive homes and offices but does not have any other convenience stores or supermarkets. Which of the following is likely to neutralize the opportunity offered by the new market? A. Wishing Well is well known for its unique offerings of local produce and organic food. B. The suburb has well-regarded public and private schools. C. Abundant retail space is available for low rates in the suburb. D. Wishing Well has a popular rewards program for its regular customers. The answer is C. Abundant retail space is available for low rates in the suburb. Inexpensive and abundant retail space will lower entry barriers for new entrants, posing a threat to Wishing Well's business. Question 20. Infinity Enterprises, a large organization with 7 business units, recently prepared a BCG growth share matrix to evaluate whether it has a balanced portfolio of businesses. Upon analysis, its 3 large business units were identified as stars, 2 medium-sized business units were identified as question marks, and 1 small business unit each was identified as a cash cow and a dog. Which of the following is a conclusion you can draw upon evaluating the data? A. The company needs to set up more business units that operate in high-growth markets. B. The company is probably facing a shortage of funds to fuel its growth. C. The company should sell off the business unit identified as a dog as it offers low-growth prospects. D. The company is probably generating excess cash that can be used to start new business units. The answer is B. The company is probably facing a shortage of funds to fuel its growth. Most of Infinity's business units are either stars or question marks. These operate in high-growth markets and require cash inputs to grow, which usually are provided by cash cows or dogs. Since Infinity has only 2 business units in these 2 quadrants, the company is likely to be facing a cash crunch. Question 21. How is strategic planning different from strategy formulation? A. Strategic planning addresses how to implement business strategies, whereas strategy formulation results in new strategies. B. Strategy formulation develops designs to implement strategies and achieve the goals, whereas strategic planning creates strategies and defines goals. C. Strategy formulation identifies the opportunities and threats in the short term, whereas strategic planning continually re-evaluates strategies based on perceived long-term opportunities and threats. D. Strategy formulation typically identifies external opportunities, limitations, and threats, whereas strategic planning identifies internal factors, such as organizational strengths, weaknesses, and competitive advantages? The answer is A. Strategic planning addresses how to implement business strategies, whereas strategy formulation results in new strategies. In practice, strategy formulation and strategic planning overlap quite a bit, but the two processes have important conceptual differences. On a fundamental level, strategy formulation results in new strategies, and strategic planning addresses how to implement the strategies. Question 22. From its facility in Raleigh, North Carolina, TMC Corporation manufactures and sells a small electric car under the brand name of Quinoa. Quinoa is the first and only electric car in the market and is a bestseller owing to its low price. Which of the following is a threat that is most likely to reduce the competitive advantage Quinoa has due to its low price? A. The price of gasoline increases sharply. B. The government places import restrictions on electric cars and other vehicles. C. New environmental regulations are imposed on fossil fuel-based vehicles. D. The government withdraws the subsidies it had extended to the electric car segment. The answer is D. The government withdraws the subsidies it had extended to the electric car segment. The withdrawal of government subsidies extended to the electric car segment is likely to increase costs and reduce Quinoa's competitive advantage. Question 23. Romero Roman Incorporated, a leading manufacturer of cars, has two product lines, small family cars and luxury cars. According to the BCG growth share matrix, which quadrant should small family cars be allocated? A. Cash cows. B. Dogs. C. Stars. D. Question marks. The answer is A. Cash cows. The cash cows quadrant includes those business units or product lines that have high market share in a slow-growing industry. Small family cars have a higher demand than executive cars, and the automobile industry is a slow-growth industry, therefore, family cars should be classified in the cash cows quadrant. Question 24. Rayner Enterprises has conducted a SWOT, strengths, weaknesses, opportunities, and threats, analysis to determine its business strategy. After studying the weighted average of the results of the analysis, one of the partners, Miranda Swift, believes that the firm should invest in exploiting market attractiveness instead of focusing on building business strength. Which of the following data, if true, suggests that Swift's conclusion is flawed? A. The calculated weighted average for market attractiveness is 4.8, and the calculated weighted average for business strength is 1.9. B. This answer is incorrect. The calculated weighted average for market attractiveness is 4.2, and the calculated weighted average for business strength is 4.5. C. Market profitability was assigned the highest weight and was rated 1 on a scale of 1 to 5. D. Market size was assigned the highest weight and was rated 1 on a scale of 1 to 5. The answer is A. The calculated weighted average for market attractiveness is 4.8, and the calculated weighted average for business strength is 1.9. Because the highly attractive market presumably will entice others to enter, planning strategies to build on the lower business strength, rather than attempting to exploit higher market attractiveness, would be the most beneficial plan. Question 25. How can stakeholder analysis be linked to strategic planning? A. Stakeholder analysis helps an organization identify the capabilities to be gained. B. Stakeholder analysis describes an organization's migration to international operations. C. Insights gained from stakeholder analysis evolve into an organizational technology strategy. D. Stakeholder analysis helps an organization frame its corporate social responsibility. The answer is D. Stakeholder analysis helps an organization frame its corporate social responsibility. Stakeholder analysis helps an organization frame its corporate social responsibility. It identifies the role good citizenship plays in a business. Question 26. Which of the following is not a level at which companies develop strategies? A. Functional. B. Mission. C. Corporate. D. Competitive. The answer is B. Mission. Companies develop strategies at multiple levels. They can be developed at the corporate, competitive, and functional levels. Strategies are not set at the mission level because there is no such thing as the mission level, therefore, this is the correct answer. Question 1. Which one of the following best describes the role of top management in the budgeting process? Top management. A. Should only be involved in the approval process. B. Should only be involved in the approval process. C. Needs to separate the budgeting process and the business planning process into two separate processes. D. Lacks the detailed knowledge of the daily operations and should limit their involvement. The answer is B. Should only be involved in the approval process. Top management is ultimately responsible for the organization's budget. To exercise this responsibility, top management ensures that all level of management understand and support the budgeting process and its relationship to control and performance measurement. Question 2. Which of the following best describes the function of strategic analysis? A. Successful strategic analysis is possible with the help of effective budgets, as the actual capacity of an organization can be determined by the variances from budgets. B. Strategic analysis is the basis for short-term planning, whereas for long-term planning, the expertise of management personnel is required for development of budgets. C. Strategy addresses the objectives of an organization and evaluates the risks of alternative strategies. D. Strategic analysis calculates the impact of events that led to failure of budget. The answer is C. Strategy addresses the objectives of an organization and evaluates the risks of alternative strategies. Strategy addresses the objectives of the organization and evaluates the risks of alternative strategies. Question 3. Jura Corporation is developing standards for the next year. Currently XC26, one of the material components, is being purchased for $36.45 per unit. It is expected that the component's cost will increase by approximately 10% next year, and the price could range from $38.75 to $44.18 per unit depending on the quantity purchased. The appropriate standard for XC26 for next year should be set at the A. Current actual cost plus the forecasted 10% price increase. B. Highest price in the anticipated range to ensure that there are only favorable purchase price variances. C. Price agreed upon by the purchasing manager and the appropriate level of company management. D. Lowest purchase price in the anticipated range to keep pressure on purchasing to always buy in the lowest price range. The answer is C. Price agreed upon by the purchasing manager and the appropriate level of company management. When setting price standards, an agreement must take place by the purchasing manager and the appropriate level of company management. During this process, it needs to be assured that the price meeting corporate strategic and operating objectives. Question 4. A management representative of Drake Edwards Incorporated discusses with the supervisor of its Tool A manufacturing unit to determine a reasonable per unit production time for the preparation of production budget for the next year. The supervisor brings forward the following points. 1. The rate of production during the first 2 hours of work is low due to the time taken to adjust with the furnace temperature. 2. The average time taken to produce 1 unit of Tool A is 30 minutes. 3. The company has a policy of granting a lunch break of 1 hour. The management representative fixes a target of 15 units of Tool A per day per worker. Assuming the company operates 8 hours per day, evaluate the effect of the target set by the representative. A. The number of defective units will increase. B. The average training cost will decrease. C. The budget will have higher negative variance from actual. D. The employee turnover will decrease. The answer is C. The budget will have higher negative variance from actual. The target set by the management representative is unrealistic. The actual daily production will be lower than the targets. Therefore, the negative variance will be higher, implying that the workers are not meeting their targets. Question 5. Which of the following refers to a quantitative expression of proposed management actions for a set period of time? A. Budgets. B. Cost of goods manufactured statements. C. Cost of goods sold statements. D. Financial statements. The answer is A. Budgets. A budget is a plan, expressed in financial terms, and is for a set period of time. Question 6. Under which of the following circumstances can a budget be considered a pressure or blame device rather than a planning, communication, and coordinating tool? A. When it includes technically incorrect and unrealistic targets. B. When it is seen as an internal control device. C. When the budget is prepared by higher authorities. D. When management fully endorses the budget. The answer is A. When it includes technically incorrect and unrealistic targets. A budget must contain technically correct and reasonably accurate numbers and facts. If the targets set in the budget are unrealistic, employees may not strive to achieve them. In those situations, the budget will be considered as a pressure or blame device. Question 7. Identify the contribution of process experts in the preparation of participative budgets. A. They are responsible for budget preparation and review of results. B. They are responsible for communication of organizational goals to the operational level. C. They help in identification and elimination of discrepancies between various budgets. D. They aid in having a detailed understanding of the costs of a particular area. The answer is D. They aid in having a detailed understanding of the costs of a particular area. When participative budgeting is used, often certain key non-managerial employees are added to the team. Team participants tend to be those who have a detailed understanding of the costs for a particular area, especially those areas that are extremely complex or variable. Such participants will not only bring more focus to a budget but will also take ownership of the budget and increase its likelihood of being followed at the operational level. Question 8. How is strategic analysis related to budget development? A. Strategic analysis establishes targets for all departments and lists the methods to achieve them. B. Strategic analysis provides a detailed and precise estimate about the future which helps an organization to accurately determine the resource requirements. C. Strategic analysis matches the capabilities of an organization with available marketplace opportunities to determine the goals of objectives for a particular period. D. Strategic analysis determines the overall financial requirements of an organization and also helps to procurement of funds at lower cost. The answer is C. Strategic analysis matches the capabilities of an organization with available marketplace opportunities to determine the goals of objectives for a particular period. A prerequisite for budget development is a strategic analysis that matches an entity's capabilities with available marketplace opportunities. Strategy addresses the objectives of the organization, locates potential markets, considers the impact of events, competitors, and the economy, addresses the structure of the organization, and evaluates the risks of alternative strategies. Question 9. How does a budget slack affect the master budget? A. Budget slack hinders ease of communication of organizational goals. B. Presence of budget slack can lead to decreased commitment from the employees. C. Cumulative budget slack at each sublevel can result in an inaccurate master budget. D. Strategic goals do not receive priority in the budgetary process due to existence of budget slack. The answer is C. Cumulative budget slack at each sublevel can result in an inaccurate master budget. Budget slack occurs when budgeted performance differs from actual performance because managers tend to build in some extra money for their budget to deal with the unexpected. Budget slack is built-in freedom to fail, and cumulative budget slack at each sublevel can result in a very inaccurate master budget. Question 10. The board of directors of Tim Craig Group wishes to increase the production for the current year. During the preparation of current year's budget, the company's production manager set the employee targets higher than the previous year. He was of the view that higher targets will motivate the employees to increase their productivity. Evaluate the validity of the production manager's decision. A. His decision is incorrect as the labor efficiency variance will be lower than the previous year. B. His decision is incorrect as employees may not strive to achieve targets they view as unrealistic. C. His decision is correct as the employee turnover will decrease. D. His decision is correct as the employee's current year's performance will improve as compared to the previous year. The answer is B. His decision is incorrect as employees may not strive to achieve targets they view as unrealistic. If the benchmark for employees is set too high, they may not strive to achieve targets they view as unrealistic. As a result, the variances from budgets will be high. Question 11. One approach for developing standard costs incorporates communication, bargaining, and interaction among product line managers, the immediate supervisors for whom the standards are being developed, and the accountants and engineers before the standards are accepted by top management. This approach would best be characterized as A. Authoritative approach. B. Engineering approach. C. Imposed approach. D. Participative approach. The answer is D. Participative approach. A participative approach incorporates communication, bargaining, and interaction among all parties involved in a division, including product line managers, immediate supervisors, accountants, and engineers. Question 12. The process of creating a formal plan and translating goals into a quantitative format is A. Process costing. B. Budgeting. C. Activity-based costing. D. Job order costing. The answer is B. Budgeting. A budget is a plan expressed in dollar terms. Question 13. Which of the following would effectively commit responsibility center managers to the company strategy in a top-down environment? A. The CEO sends a memo to each manager with specific instructions on forming their budgets. B. The CEO sends a completed budget to each manager for review. C. The CEO interviews managers and key employees to determine what they feel the responsibility center's priorities should be. D. The CEO waits for budgets to be submitted and then reviews each for fit with strategy. The answer is A. The CEO sends a memo to each manager with specific instructions on forming their budgets. In a top-down environment, a budget proposal is the initial step in a budgeting process, and before managers make a preliminary budget, the CEO sends a directive or memo to each manager explaining what the corporate strategy is so they can create their budgets with this in mind. Question 14. Upper management has a morale problem with middle management. Many middle managers are getting poor performance appraisals, but these managers don't feel that they are to blame. Which of the following could best help this company out of their situation? A. Base the performance appraisals only on variable costs. B. Separate uncontrollable costs from controllable costs and judge managers only on the latter. C. Separate product costs from period costs and judge managers only on the former. D. Replace managers who get poor performance appraisals. The answer is B. Separate uncontrollable costs from controllable costs and judge managers only on the latter. Holding managers accountable for uncontrollable costs can be unmotivating. However, controllable costs are useful for performance evaluations and budgeting because managers perceive these as fair. Some fixed costs are controllable costs. Question 15. A management representative of Anna Huff Incorporated proposed a budget for the current year considering there will be no work delays, interruptions, waste, or machine breakdown. Which type of standard is being prepared? A. Participative standard. B. Reasonably attainable standards. C. Participative ideal standard. D. Authoritative ideal standard. The answer is D. Authoritative ideal standard. Authoritative standards are determined solely by management and ideal standards allow for no work delays, interruptions, waste, or machine breakdown. Since the management representative is the sole person proposing the budget and he is considering there will be no work delays, interruptions, waste, or machine breakdown, this is an authoritative ideal standard. Question 16. Which one of the following will allow a better use of standard costs and variance analysis to help improve managerial decision-making? A. Company B uses the prior year's average actual cost as the current year's standard. B. Company D constantly revises standards to reflect learning curves. C. Company A does not differentiate between variable and fixed overhead in calculating its overhead variances. D. Company C investigates only negative variances. The answer is B. Company D constantly revises standards to reflect learning curves. To allow for a better use of standard costs and variance analysis assisting in the improvement of the managerial decision-making process, constantly revising standards to reflect learning curves will allow for the organization to more effectively understand their costing structures and better reflect the true variances of comparing standard costs to actual. Question 17. A higher authority, other than the team that developed a budget, must review and approve the budget. How does this contribute to a successful budget? A. Higher authorities will be able to identify flaws and discrepancies in a budget. B. Higher authorities are able to enforce a budget more effectively. C. The budget authorized by higher authorities is considered more realistic by employees. D. The budget authorized by higher authorities contains technically correct and reasonably accurate estimates. The answer is A. Higher authorities will be able to identify flaws and discrepancies in a budget. Higher authorities are in a better position to identify flaws and discrepancies in a budget. They are also capable of identifying unrealistic goals and targets set in budget. Moreover, they also vouch for the adequacy of the targets. Managers sometimes set low targets which are easily attainable in order to meet performance standards. However, this affects organizational goals in the long run. Question 18. When budgets are used for performance evaluation and to set limits on spending, the process will often result in departments adding something extra to ensure the budgets will be met. This extra is called A. Tactical planning. B. Budgetary slack. C. Management by objectives. D. Continuous budgeting. The answer is B. Budgetary slack. An extra cushion built into the budget to protect against the unexpected is called budget slack. It involves over-budgeting or padding expenses and under-budgeting revenues to make the budget targets easier to meet. Question 19. Which of the following factors affect the standard costs for direct labor? A. Supply chain costs. B. Product quality. C. Nature of manufacturing process. D. Product's targeted market niche. The answer is C. Nature of manufacturing process. Product complexity, personnel skill levels, the type and condition of equipment, and the nature of the manufacturing process will affect the direct labor costs. Question 20. A company allows its managers to regularly revise the budget whenever they feel that circumstances merit a change. Which of the following is not a risk for such a policy? A. Employees may not be motivated to work as hard toward their goals. B. Employees may be confused due to less clear operating guidelines. C. Managers may set the threshold for revisions too low, and changes could occur too frequently. D. Managers may set the threshold for revisions too low, and changes could occur too frequently. The answer is B. Employees may be confused due to less clear operating guidelines. Regular revisions usually provide clearer operating guidelines. The other options are all risks of regular revisions. Question 21. During a planning process, which of the following activities would be completed last? A. Tactical goals. B. Operational plans. C. Strategic objectives. D. Vision and mission. The answer is B. Operational plans. The logical order for the activities listed is 1. Vision and mission, 2. Strategic objectives, 3. Tactical goals, and 4. Operational plans. An operational plan formulates specific goals for each SBU, with detailed revenue and expense budgets. Question 22. Which one of the following is an attribute of an authoritative approach to budgeting? A. Communication of product perspective to management. B. Budget slack built into the budget. C. Incorporation of strategic goals into budgets. D. Expertise leads to informed budget decisions. The answer is C. Incorporation of strategic goals into budgets. In an authoritative budget, top-down budget, top management sets everything from strategic goals down to the individual items of the budget for each department and expects lower managers and employees to adhere to the budget and meet the goals. Question 23. The production manager of Brian Matthews Group has received an urgent order of additional 10,000 units from a regular customer. To fulfill the order, the employees need to serve overtime. The overtime wages will be 150% of the usual hourly wage rate. However, the personnel manager is not in favor of allowing overtime because this will use up too much of the budgeted wages for the quarter. Which of the following alternatives will most likely undermine the personnel manager's argument? A. The personnel manager should not allow overtime as the actual wages will increase the budgeted wages. B. The personnel manager should allow overtime to avoid losing its regular customer. C. The production manager should provide the extra units to the customer by postponing other less urgent orders. D. The production manager should not accept the order for extra units as this will affect the current production budget. The answer is B. The personnel manager should allow overtime to avoid losing its regular customer. Rigid enforcement of budgets will, in some situations, cost an organization more in the long run than if some flexibility is allowed. Therefore, in this situation, the personnel manager should allow the overtime and exceed its budgeted expenditure rather than losing its customer. Question 24. If 0.6 manufacturing labor hours of input are allowed for producing one output unit and labor hours cost $15, then the standard cost of labor would be A. $9 per output unit. B. $10.50 per output unit. C. $14.10 per output unit. D. $6 per output unit. The answer is A. $9 per output unit. Direct cost items such as direct materials and direct labor are measured by determining the number of units of each type of input required to get 1 unit of output. This amount, 0.6, is multiplied by the standard cost per input unit, $15, thus 0.6 labor hours per unit times $15 labor cost per hour equals $9 labor cost per unit. Question 25. The production manager of Eileen Corporation is responsible for determining the standard cost for direct materials during budget preparation. For ascertaining the supply chain costs, he always selects the lowest cost vendor. Which of the following, if true, will affect the general cost behavior? A. The costs will vary each year. B. The costs will remain more stable each year. C. The costs will remain fixed each year. D. The costs behavior cannot be determined. The answer is A. The costs will vary each year. Selecting the lowest cost vendor each time will result in varying costs each year, as the vendor quoting the lowest cost is likely to change every year. Question 26. The budgeting technique that is most likely to motivate managers is A. Top-down budgeting. B. Incremental budgeting. C. Bottom-up budgeting. D. Zero-based budgeting. The answer is C. Bottom-up budgeting. Motivation is enhanced by having lower-level managers involved in the budgeting process. Bottom-up, participative budgeting promotes such involvement. Question 27. All of the following are advantages of the use of budgets in a management control system except that budgets A. Provide performance criteria. B. Force management planning. C. Limit unauthorized expenditures. D. Promote communication and coordination within the organization. The answer is C. Limit unauthorized expenditures. Advantages of management control systems include the forcing of management to plan, providing performance criteria, and the promotion of communications and coordination within the organization. Question 28. All types of organizations can benefit from budgeting. A major difference between governmental budgeting and business budgeting is that A. Business budgeting is required by the SEC. B. Governmental budgeting usually represents a legal limit on proposed expenditures. C. Business budgeting can be used to measure progress in achieving company objectives, whereas governmental budgeting cannot be used to measure progress in achieving objectives. D. Governmental budgeting is usually done on a zero base. The answer is B. Governmental budgeting usually represents a legal limit on proposed expenditures. In governmental bodies, expenditures are based upon legislative appropriations. These appropriations create legal limits on expenditures. Question 29. Which one of the following items would most likely cause the planning and budgeting system to fail? The lack of A. Input from several levels of management. B. Top management support. C. Historical financial data. D. Adherence to rigid budgets during the year. The answer is B. Top management support. Receiving support from top management in an organization is an integral, if not most important part of the planning and budgeting process. As top management has responsibility of the overall strategic planning and budgeting of the organization, attaining the support and approval of top management is of utmost importance. Question 30. Which one of the following is most important to a successful budgeting effort? A. Reliable forecasts and trend analysis. B. Top management support. C. Experienced analysts. D. Integrated budget software. The answer is B. Top management support. Top managers determine and significantly influence how budgets are perceived in their companies. Top management initiates the planning and budgeting process and approves policies and procedures regulating it, which makes its support a crucial success factor for the budgeting process. Question 31. National Telephone has been forced by competition to drastically cut operating costs, which has resulted in a change from static budgeting to flexible budgeting. Which one of the following steps will not help National Telephone gain maximum acceptance of the proposed budgeting system? A. Implementing the change quickly. B. Increasing communication with employees about the reasons for the change and the potential benefits that will result from it. C. Focusing departmental reports only on items that are under manager's control. D. Demonstrating top management support for the change. The answer is A. Implementing the change quickly. Quick implementation will not allow management and employees the time needed to get on board and accept, or buy into, the new system. Question 32. Murphy Harvey Incorporated has completed 1 year of operations. For the current year, the board of directors has prepared a budget planning its course of actions throughout the year. However, the company's CFO is of the opinion that the implementation of budgets involves a lot of cost, hence it is not feasible. Which of the following will most likely justify the CFO's view? A. If resources are not available at the cost estimated in the budget. B. If there is an increase in working capital. C. If the company plans to make an investment in a new equipment. D. If there is a negative change in sales. The answer is A. If resources are not available at the cost estimated in the budget. If resources are available at a price higher than the price estimated in the budget, the company will incur more costs than estimated. Question 33. Under which of the following circumstances, relying on historical costs will provide faulty results? A. When it does not take into account the impact of new technologies. B. When it does not perpetuate past inefficiencies. C. When the data was approved by the Budget Committee. D. When it does not account for inflation. The answer is A. When it does not take into account the impact of new technologies. Historical data can perpetuate past inefficiencies or fail to take into account the impact of new technologies. Therefore, relying on historical data for determining costs is not always feasible. Question 34. Which of the following is not a component of the master budget? A. Cash budget. B. Sales budget. C. Direct material budget. D. Selling and administrative budget. The answer is A. Cash budget. An operating budget is broken down into the different operational budgets of the organization, including a sales budget, production budget, direct materials budget, direct labor budget, overhead budget, cost of goods sold budget, and selling and administrative expense budget. A cash budget is one of the subsets of the financial budget.